Hello, everybody. Thank you again for being with us this week. Andy, thank you for being with us this week again. And we're going to be have a quick conversation about what's going on in the mortgage world and the real estate world. We got some great news last week, Andy, about interest rate. Can you kind of like fill us in about it?
Yeah, I'll be glad to. So, as you know, Tony, we get a lot of confusion from consumers when they hear the Federal Reserve raised rates or the Federal Reserve lowered rates or kept them the same. A lot of consumers think, well, then mortgage rates went up with the when the Fed raised rates, or they went down when the Fed lowered rates, or they stayed the same because the Fed kept the rates the same. But the Federal Reserve does not directly control mortgage interest rates. And so, with that being said, the mortgage rates are controlled by whatever the bond market does when it's trading mortgage backed bonds. And so, the mortgage backed bonds typically will move in one direction or the other ahead of the Federal Reserve. And so what we had this week or this past week was the Federal Reserve kept interest rates the same, and this is the part I love because it's all based on speculation, just like the stock markets are based on speculation. So they said, well, we're not going to tell anybody what our timeline is for raising or lowering rates in the future. So the market took that to mean, well, the Fed's going to lower rates in September. So because the market took it that way, the bond market, when I say the market, because the bond market took it, their interpreted their statement that way, the mortgage rates improved. So we're now about 4 weeks, 5 weeks into better mortgage rates. And, I have to be careful when I quote mortgage rates because if I don't give an APR or an annual percentage rate, as it's called, with that interest rate quote, it can be against the law for me to quote a rate. So I can give a rate range, and that rate range is pretty broad. So why don't I just say this? We're looking for the at rates for the very best, most qualified borrowers or buyers out there in the upper sixes with no discount points, or if somebody wanted to pay a discount point in the mid sixes, the low to mid sixes. So interest rates, mortgage rates are very good right now. There's still some signs and some expectations that they're going to improve over time, but no one knows what that timeline is. And I'll just say this, you and I have talked about this numerous times this year. If a buyer finds a house, the perfect house for them today, with interest rates being where they are and with expectations that rates are going to drop in the future, they should buy that house today. And
Absolutely.
then let's come in a year, 18 months, 24 months, whenever it does make sense to refinance, we'll come in and refinance that loan. And we always try to work with our previous clients on the closing cost to try to bring those closing costs down on that refinance so that it's still an attractive proposition for the buyer to be able to save some money for the next 30 years if they want to stay on a 30-year loan, or maybe they want to go with a 20-year loan at that time. But there's opportunities to save some money by refinancing in the future once they do get that house under contract and get it closed. So,
Yeah, and there's a couple points over there. There's some people that still don't understand exactly what is the difference when you quote an interest rate and also you give them an APR. What is it? What's the difference between both and why you always have to quote the APR?
okay. So, federal law requires mortgage companies, banks, anyone who loans money to quote an APR when they quote an interest rate. just to put the APR in the simplest terms I can put it in, it's the APR stands for an annual percentage rate. And an annual percentage rate, very bluntly, is a made up number, but there's a calculation for making that number up. And essentially that calculation takes into account the interest rate that the buyer is being charged on the loan. So the note rate, whatever their payments are determined on, that note rate is factored into the APR, and some of the closing costs. Let me give you an example of what some of those closing costs are that are included in an APR. Mortgage insurance is included in the APR.
Okay.
An underwriting fee is included in the APR. So the government came up with this formula years ago to say, well, let's look at the problem they were trying to solve first, because the problem is real and the problem's still there today. It's not solved by the APR. They tried, but many times the government means well and just doesn't quite accomplish what they're trying to accomplish. But here's what the problem that they were trying to solve. If Gagliano Mortgage quoted a buyer an interest rate of, say, 6.75 on a $200,000 loan, and that buyer went and $5,000 in closing cost, and then that buyer went next door to the bank, and the bank quoted that buyer a 6.875 interest rate, so a little bit higher rate, with a $4,000 closing cost number, then for a buyer, that gets to be pretty confusing. Do they go with the higher interest rate and lower closing cost, or do they go with the lower interest rate and the higher closing cost? So that was very confusing for buyers. It's still confusing today, but that's why the APR was, why that formula was calculated, and why we deal with that term today and why it's out there. So the APR is designed for a buyer to be able to take a benchmark interest rate number from bank to bank, mortgage company to mortgage company, and compare that benchmark number to see who has the lowest interest rate and closing costs. Now, with that being said, here's the problem, and I already mentioned it. That APR only takes into account some of the closing cost and not all of the closing cost. So if the government was going to make things very clear for prospective buyers, they would have said, okay, mortgage companies, take your interest rate and add in all of your closing cost. Then you've got an APR that a buyer can take from company to company to company and compare and get a true apples to apples comparison. But instead, here we are.
That would be on the perfect world.
That would be in the perfect world. Here we are in a semi not so perfect world, but it's better than nothing.
Correct.
So yeah, so the APR, we mortgage companies are required by law to quote an APR when we quote an exact interest rate. So that's why I won't give us an exact rate in these videos.
Yeah, correct. No, we never do that because, everything changed from 1 minute to another. And
yeah,
people take certain comments for granted, and we don't want to confuse anybody. And one of the other things is that I like that you mentioned, with what's going on with interest rate last week and event in the last 2-3 months, how important it is that if you qualify and you can make the monthly payment on your house, go get the house because you buy today's price. And I like it that you mentioned that you can always refinance later. And one of the most important things when you refinance is, first of all, you're not going to pay a real estate agent commission. We all want to save money, and you're only going to have to pay the fees related to the refinancing. So you're going to be saving thousands and thousands of dollars when you refinance. And you're going to be refinances based also on the equity that you already built in the house. So you're not going to be buying a $500,000 home in 2 years just because it's just an example, a 5% interest rate. When today you probably can buy the same house that is worth at $300,000 at 6.5% interest rate. So when you hit the $500,000 value in the house and the lower interest rate, you got enough equity and you might be able to qualify real quick for a refinance and lower your pay, correct?
So true.
Yes. And also, we're talking about real estate interest rate all the time. And I just want to leave you guys with something very interesting. The average interest rate for a car loan, an automobile loan, is 9.56%. And that is as of July 30th, 2024. So, and they have a range between, for people who got a credit score between 300 and 500, this is around 21.57 interest rate on a car. It's a car that that the minute you drove out the dealership, lost value. So you're paying higher interest in something that you're never going to recoup the value. You're not going to really make money on the resale. Is very, very rare. And there's certain vehicles that, yes, you get your money back. But think about it. When you buy a house, you're going to get value out of the house. That's a great investment. Everybody agrees that is one of the best investments. And we got the credit card. As of also July 30th, 2024, the credit card interest rate, the range is between 24.72 and 27.62. This is the highest I've seen it in the longest time. Yet, I don't hear nobody complaining about those interest rates. So for every $100 that you borrow on a credit card, you are paying an average of $26.
Yeah.
And that's not an investment. So why don't buy? If you qualify, you can make your monthly payment. Just qualify for your house. Just get into the house. That's the first step. You're going to gain equity. That is one of the best investments you can do in your life because you're not going to lose on real estate. And people want to buy a house. They want to qualify. They need to get more information about interest rate. How can they contact you?
Yeah, Tony, they can reach me at 205-979-4412. I'm at extension 1, and I'll be glad to help them. And, here's the thing. We're talking about refinances. If someone thinks that they can refinance and save some money on their mortgage, the only way to know that is to run the numbers, look at it in black and white. And what we do is we'll look at what that proposed payment is going to be, the new payment, versus what the costs are. And by looking at that, we can determine what a break-even period is going to be on that loan or on that refinance. And someone may say to me, hey, Andy, I'm thinking about selling my house in 3 years. Does a refinance make sense? Well, let's just very quickly look at a scenario and say, well, if they're going to save $100 a month on a refinance and it cost them $6,000 in closing costs to do it, that's 60 months of saving $100 a month to break even on that refinance. If they're going to be in the house for 36 months and then put it on the market, a refinance does not make sense. But what if they're going to save $300 a month and it cost them $6,000 to do it? Now you're talking about a 20-month break-even period. And if they're going to be in the house for 36 months, well, then 16 months, that last 16 months that they're in the house, of those 36, they're going to save $300 a month. So it makes sense in that case. That's the kind of calculations that we run for people. And look, a lot of times we'll tell people it doesn't make sense for them to refinance, and we'll keep an eye on the rates and call them back when that time comes where it does make sense for them to refinance. So yeah, just feel free to give us a call. If it's a refinance, we're glad to help you. If it's a purchase, and you're working with Tony, or, you know, we'll be glad to look at numbers and run different scenarios for you there as well. So, Tony, how about for you? How can somebody get in touch with you?
Oh, people, my contact information is 205-370-3248. You can call me, text me at any time. We can create a plan together with Andy, and we make sure we put you in a house if that makes sense to you, if that is something that you're going to be able to make those monthly payments. Don't wait until the interest rates get lower and lower, because the more you wait, the more competition you're going to have. And we don't want to go back to 2020, 2021, when for one house you have 22, 24 offers that inflate prices. That was crazy, really, really crazy. And some people end up paying more than they should have. So
Yeah.
I'll leave you guys with all that. So Andy, again, thank you very much. It's good to see you this week, and we're gonna see each other next week, and let's see how everything goes.
That sounds great. Looking forward to it. I appreciate it. Have a great week.
You too. Take
All right.
care.
Yes, sir.